Good morning, Jay. How are you?
Hi, good morning, Johnny. How are you? How was your
Doing
long
well,
weekend?
doing well. It
How
was
was your
good. It
long
was
weekend?
good. Yeah, we didn't do a whole lot. Really just taking it easy and had a a small group picnic after church on Sunday. So that was good. Catch up with everybody and kind of our last get together before the summer kicks off.
Right.
Yep. So it was all good.
Good
And
morning,
no
John.
soccer for a change. Hey, what's up, Faye?
I
Good
have to
morning.
remember it's showing us Johnny Lino in there.
Oh yeah. How's everything been going, Jay, with the land deal that you've been working in California?
I'm still working on making it possible. There are challenges, but I am trying to overcome them.
Yeah, no, those type of deals, you definitely have a limited buyer pool for those with the raw land and the need for the development aspect of it. So it's definitely has to be a niche focused investor that's going to be the end buyer for something like that.
More than investor, what I think, uh, uh, I it is a strategically it is to do it with strategic some kind of a different approach like um, when the seller he is um, motivated to sell the land and it is selling it at current appraised value and that too at 30 to 40% of the current price. So in that sense I find that it's a definitely lucrative way of acquiring this land. And when you get something for one third the price, then I think after entitlement, definitely it's almost doubling the current value. So when it doubles the current value, I can refinance and or even I can get a money partner or some kind of syndication because I don't have that kind of a powerful network for that syndication, but some kind of syndication. Uh,
Mhm.
it can be capitalized, and like a, it's a lifetime kind of project that can be done. That could be there can be a residual income and everything. So there is a good potential. Just that I need to understand how I can make it possible.
Most definitely, most definitely. I think that's the biggest thing is being able to see the vision and the long term possibility for the land in the area and translate that. And I think right now, finding the right people is the big part because over the last couple of years, new construction has been at a decline, just because it's been prohibited just by the interest rates, as well as the run up in material costs. And I think right now rates have shot back up well over 7% for his mortgage rates on the residential side, and of course, commercial lending as well too. So I think definitely finding people that's interested in developing is going to be a challenge for anybody right now,
That's true.
unfortunately.
But apart from that, I am also like if you have anything which is negatively performing or something which is not okay to wholesale it, like if there is some kind of a underwater properties negative or low equity or any kind of code violations or anything of those kind. So if somebody has it, I would be interested in taking it forward, working with some attorneys to remove those code violations or anything of those things. Then I would be interested on those.
Yeah, no, most definitely. And I think that's a strategy for anybody in any market to start looking at those problem properties, if you will, with understanding the code violations, pre-foreclosures like Dr. Joel focuses on, and water shut off or delinquent tax payments, any of those signs which will bring you to a homeowner or investor that's having challenges that may need assistance. So I think being able to work that in any area that you're concerned about or any area that you're looking to invest in is a great strategy, because you focus on the pain, follow the pain, and be in a position where you can solve the people that are in pain, solve their problems. You're gonna be in great shape in any interest rate environment, in any type of real estate market, because the name of the game is buying low and buying at a discount. And a lot of times that you see when people like don't pay their taxes, that they most of the times they don't have a mortgage or the mortgage is in escrow. So some opportunities out there.
Right.
Good morning, Adam. Good morning, Christine. Welcome, welcome.
Good morning.
And thank you
Good
for sharing those.
morning.
Yeah, thanks. Thanks for sharing those deals too, Christine.
School's out, so it's easier for me to join now.
Ah, nice. You had 2 more weeks.
Good luck. Sure, they're motivated.
Yep, yep. Well, awesome. Any wins to share from the last week? Anybody?
For us, I think I told you about this 2 or 3 weeks ago. We purchased not purchased. We're in the process of working through the due diligence of our first investment tax credit transfer. It's a $50,000 solar system in upstate New York on a like a horse. I don't know where you want to put your horse, get training, all that kind of stuff. Whatever those things are called. Show horses, that kind of stuff.
Oh, like was it equestrian
There you go.
training?
Yeah. So we purchased a $15,000 tax credit off of that at about 75 cents on the dollar, working through all the legalese, all the accounting type stuff, all the contracts, all the 37 bits of new IRS rules I was unfamiliar with, yesterday type of stuff. It's a small project or a small transaction, using it as a proof of concept. And then we are raising funds right now from other real estate investors that have taxes on their passive income for other deals, and we're looking at got about 6 to 10 deals that we're looking at below 200,000. So trying to scale up while watching legislation, making sure legislation doesn't move against us, type of stuff. Right now, the big beautiful bill that was passed in the House last week
Right.
is not good for us or for solar or for tax credits and transferability. But two things that we're kind of trying to stay positive about is, one, there's no retroactive language in there. So anything we do before the bill becomes law, like there's no risk of the IRS, canceling anything. And then we'll see what the final law says. And then there's rumors that the Senate will walk some of that language back. So we'll see. But yeah, that's our win right now. Primarily just focusing on a lot of the, like I said, the legalese, the contractual stuff that is new for us. It's new for a lot of people.
Okay. Yeah, no, it is. It is, but I think it's a lot of opportunity. I think with that, the big beautiful tax bill, that it's going to be interesting to see that you have both sides kind of going at it. And I think one of the I guess is spoken challenges that they have is that we're reducing taxes, and the bill and how it's positioned itself right now, that it's still going to be adding to the deficit at the same time that we're reducing taxes. And I'm like, how are we
Well,
where
we're
we are
trillion.
right now?
So I expect interest rates to go up, and that
Right.
will offset any tax gains you might get.
Exactly. If not more. And it's going to be a lot more pain, I think, is the thing. So it's going to be interesting to see just where the bond market's been responding and where rates have shot up the last couple of weeks. It could get worse before it gets better. That's for sure.
Yeah.
And the last thing we need is stagflation. Where we have a large unemployment and the economy's going down at the same time we have high inflation. That it would be it wouldn't be good for for a lot of people. And I think,
Yeah.
still, I think that kind of pushes us back as investors on the real estate side, that you're going into these deals from day one looking at cash flow. Like the days of going in, I never really bought for appreciation. Appreciation is icing on the top, but just going into a deal with negative cash flow, looking for appreciation, I think those days are over. I think right now, month to month, I think it was like a 0.12 decline in real estate average sales prices, which year over year, I think is still up over 1%. But I think the big thing with all this that's happening that we don't control with the economy, with the tax legislation, is the ability to do great deals and to get crystal clear on the area that we want to invest in, our buy box on where we want to focus and look for the pain, because there's going to be a lot of pain that comes out. But the thing is, it's like, okay, if interest rates are at 8%, then you need to find a deal that cash flows at 8%, which ultimately means that the properties are going to have to trade, they're going to have to sell for less, and you're going to have to make offers for less. And so I think that's going forward, that we're going to have to err on the side of caution and understand that there may be some contracting that's going to happen in the market.
That average 0.1% appreciation, I'm sure the standard deviation is quite large based on location, based on time. Like here in, watching the markets in San Antonio and Austin, during COVID, pre-COVID, during COVID, and immediately after COVID, things were fantastic. If you owned a property, then interest rates went up, and the housing market has slowed, and a lot of people are getting caught when the water goes out. I got caught in some of that myself with I was a limited partner in an apartment building where the general partners did not do their due diligence, did not manage it well, and it fell apart. But that 0.1% appreciation, that is not a market where you should assume appreciation. That's the market where you should assume you need to do your due diligence.
For sure. Yeah, no, thanks for sharing that. And I think that's the big part, that you just got to be conservative. I know a lot of times when you hadn't done your first deal or hadn't done a deal in a while, that we get a little bit anxious and we try to talk ourselves into doing the deal. But in reality, you end up saying no more than you say yes to deals. And if you can't get it for the right price, then it's like, okay, then, it's on to the next deal. And I think that's where we look at different opportunities and always, hearing the sounding board with the tax credits and being able to take advantage of opportunities that present themselves regardless of where we are in the economy. There's always going to be opportunity. Being able to leverage AI. I see more and more people showing up. They have the AI meeting notes, and that's the personal assistant that's tracking the conversation and things like that. I use it for asset management. That's one of the things that we'll be sharing here over the next month or two, is kind of building out how I do asset management, leverage AI for its metrics, and kind of as a sounding board for everything that I do when it comes to measuring the performance of the assets that I have now. And so I think it's really taking a broad look at everything that's happening right now and understanding, where do you want to focus in your time to be successful, and know that you're not going to have 100% of the answers going into any deal. And there's still going to be a step of faith, but I think you want to arm yourself with as much information as possible to make a decision and make the right decision that's based off your risk tolerance and your level of competency that you have right now in that asset class. So,
Good stuff.
yep, no, most definitely. I think it's a lot of opportunities. It's challenging, but I think one thing with the military has taught us It's how to be flexible in our approach. And the battlefield, the battle space, if you want to use that analogy, is always changing. It's dynamic. And we just have to continue. We're in that infinite OODA loop where we're going to orient and we're going to figure it out. And then we're going to decide and we're going to take action. And then guess what? We're going to assess it and keep doing it and keep going through the cycle each time. So it's no different here.
Absolutely. And just make sure you know who's on your six too. I guess that's going to be
Yes.
important as well. So knowing, everything that you have on your arsenal, but knowing as well who's staying, who's looking over your shoulders. It's another element to make sure that you're able to move forward and make that, good decision, less risk. Glad to see Dr. Joe here, Rwanda. And is that Earl in Renisha? Great to see you guys.
Good morning.
Good morning.
Good morning. Yeah, we're just going through and talking a few different topics, but definitely want to open up to introductions for those who haven't introduced themselves if they're so inclined, and definitely going through any highs from the last week, any wins that you'd like to share with the group.
My name's Renisha Jenkins. I'm a realtor and investor out of the Dayton, Ohio area. One of my clients, who I also property manage for, Christine Chapman on here, introduced me to the group. So I'm excited to learn new things.
Awesome. Well, welcome to the group. What was I listening to? I can't remember the source, if it was a podcast or if it was YouTube somewhere. They were talking about the Midwest and the Dayton, Ohio area, and I think it was Ken McElroy. He was interviewing someone that was part of one of his mastermind groups, and he was talking about Dayton, Ohio in particular, with just the Midwest. And right now, the Midwest is turning to the Southeast over the last 3-4 years, with the emphasis that we've seen on like the Texases, the Floridas. Phoenix was another one. And so just talking about, this gentleman, he's been doing deals in the Midwest for at least, I think he was saying since the early 2010s time frame. And they just talk about the out-of-state investors. They come in, they don't know the neighborhoods. They look at all the CoStar data and think they can achieve these crazy market rents, but they don't know the intricacies of like that side of town or by the street and what it means, and they'll never be able to achieve certain type of returns in a certain area, but they don't know that because they don't have the ground knowledge. And so it was interesting to listen to the conversation yesterday. And I think I think it's his fiance, but she's from Akron, Ohio. And she was just talking about how Akron, Ohio, I think was recently voted like #1 area to invest. There was some report. But with that, there's a lot of people looking to the Midwest now for yield, and you don't have the level of population growth like Florida and Texas has, but there's a lot of stable income, stable rent growth, as well as that right now when you start looking at affordability, it's still one of the most affordable places in the United States to buy. I'm behind right there with the Southeast. So I think it's going to be interesting to see, the run up there. I think Columbus has always been on a lot of people's radar or over during the last 5-6 years, just with this diverse economy. So it's going to be interesting to see the Midwest. So I think you may be seeing a lot of more people coming into the Dayton area, which Dayton has always been pretty interesting to me, being an Air Force person. And, on the acquisition side, we routinely come through their TDY and things like that. So, I think it's awesome. Glad to have you.
Thank you. I definitely agree. There's a lot of growth that is waiting for Dayton, because I also do in Indianapolis as well. That's where I'm from, and it's very difficult for me right now in Indianapolis. My brother's a realtor as well, so we have a few properties there and doing more Airbnb with those properties now, just because of all the companies that's in Indianapolis, all the sporting events that's really popular right now. So, that's given us a better return than a regular rental. But the Midwest is definitely interesting. We're also looking in Gary, Indiana too, which is like Northwest Indiana. That's like, I think, going to be the new suburb of Chicago because it's fairly cheap to get a property there. So that's another Midwest place that I think is on the rise as well.
Okay, really? Wow. I remember my dad just telling us he transitioned from Alabama to Detroit, Michigan, like in the late 60s. And he had family members that ended up in Gary, Indiana. And, back in the day, that wasn't a place that you wanted to go and visit, the last 10,
Right.
20 years. But it's crazy, but like how things are transitioning. We see that in a lot of the metro areas now that, they're being revitalized. Gentrification is coming into a lot of these areas as well, too. So, once again, opportunities in like every market that we have, we can find those areas. When I tell people that, like, over the last 3, 4 years, that Montgomery, Alabama has brought in over $2 billion of new development with new industries coming in, that it's just a lot of people not tracking a lot of the changes. And it all starts with like the legislation and laws. We talked about this big, beautiful tax bill, but it's over 1,000 pages. And like when you start going through this legislation, like they slide different things in for each one of the senators, the congressional members. Like there's different things for their constituents, for their areas, their districts that they're over, that they're doing things. They're bringing money back to their district. So, being able to dig in and understand how that impacts your area that you want to invest in is going to be critical to position yourself and your strategy long term. So no, I definitely appreciate you sharing that with some of those markets because, hey, we know somebody that used to invest in the Indianapolis market.
I know.
Yeah.
Yeah.
Yep.
Yeah.
That's been a market that's been
Really good
that we've
market.
been following for a while. Yep.
I would love to see, to see and learn more about those markets too, from you, Renisha. So, we are honored to have you here.
Thank you guys. I appreciate it.
Yeah, no, most definitely. I think, everybody here in the group, if there's something that you think would be value add to the group, to the community that you want to share or present on like, hey, this thing is happening or this is something I learned, by all means, reach out to myself and Faye, let us know. And we're all for education and learning and looking for new opportunity.
Yep. I'm gonna reach out to Renisha. Guys, if you're new here, you feel free to drop your contact information on the chat so we can invite you to, inside the community. I'm not sure if Christine already invited Renisha yet, but if you haven't, let's just go ahead and have her inside school. If there are opportunities that you guys are seeing, we'd encourage you as well to share it with us and with everyone else in the community as well. So yeah, let's exchange information so we can stay connected.
Awesome. One of the things that I wanted to tee up to the group and kind of get some feedback was, those that's done deals, and for those who haven't done deals, this will probably help you as well too. Um, How was how was the transition to your deal? Did you have it all figured out? Did you have all the information? How did the cards lay out for you for your first deal? I'm curious, just kind of going through because I know that's one that a lot of new people struggle with is getting that first deal, and I call it the law of the first deal. I picked that up over the years that being able to the benefits that come with just getting that first deal done, but how was it for you guys? If you share a little bit about your story, how was it for you doing that first deal? Did you have it all figured out? Was it scary? Did it go as planned? Because I know we had Antonio that shared last week, and he was saying, yeah, he learned a lot, on his first deal. There's a couple of things that he's going to take with him going forward. So I was just curious that had kind of came up, as I was preparing for this, that I wanted to ask the group, those that's kind of been in real estate and done a few deals under their belt, to kind of share briefly their stories. I see Dr. Joel. I see Dr. Joel's pictures. I'm gonna pick on you, Dr. Joel. I hadn't heard from you this morning.
Good morning. Good morning. Um, my first deal is still a lesson in evolution. Um, I studied real estate for years on the sideline. Did a few tax liens, active tax liens that I flipped. But far as acquiring properties to buy and hold, my first deal, it was a little scary. but I was sort of forced to act because I had a deal dropped in my lap practically, and I had just done some research concerning it. Was a pre-foreclosure, and I had just done some studying on taking over pre-foreclosures, how to talk to the bank, get loss mitigation options. I'd been studying how to dispo stuff creatively, so all that came in handy. All my previous learning came in handy, and since then, I've continued to add to that. I continue to learn. I haven't acquired any multifamily yet, but I've put in offers along with Johnny, guiding me how to write a LOI, how to do due diligence, how to consider different ways to finance deals. So I'm still learning, and I'm getting closer and closer. I realize now how much I have progressed. I'm a education freak. I love attaining knowledge. I surf the internet all the time, and when I get into the others groups, I sort of peek in sometimes, see what they're doing, what they're talking about. I realize just how much my knowledge base has grown over the past 2 years that I've been in Johnny's group. I mean, I heard people talking about, how to calculate DSCR value to determine whether or not this is a good deal. I mean, I hear people talking about cap rate and how to figure cap rate. And I know all that stuff because of my affiliation with REI Genius Group. So I feel very confident now. And I feel even more confident I have a team to fall back on. And I really appreciate that, not having to be out there by myself. A lot of new investors worry about making a big mistake and getting into trouble. But, when you're part of a team, you're part of a group, when you're part of a mentorship, you don't have to have that fear because you got somebody you can always pick up the phone and say, look, let me run this by you, or tell me what you think, or tell me how to go about this. I mean, I called Johnny up and said, I need an LOI. And Johnny sent me an LOI or told me you can use your retirement account as your LOI, as your proof of funds. And I didn't know that stuff. But having him right there, in the thick of things really makes the difference. And I appreciate that.
No, I definitely appreciate you sharing that, Dr. Joel. And it's been cool to see the journey and all the people that you're helping with the deals and the creative financing piece and everything that it's part of the journey and all of our journey. I think I could have started a lot sooner. For me, it was just like, okay, one duty station, work 3 years, buy another property with my VA loan. Okay, do another 3 years. Like, okay, there's got to be a faster way to build wealth. I can start doing this, and then I bought a $25,000 house instead of $6,400 house. And you just you get through and just start taking action, doing the things that you're doing. And next thing you know, you look up 5 years from now, I'm like, oh, okay, that I'm a millionaire. I built up this wealth with these assets over time, and and appreciation and cash flow and everything that comes with it. But no, I think that's awesome. Anybody else want to share kind of their journey, their first deal, and just kind of how was it for you from a mental, emotional standpoint, and was it worthwhile? Would you do that same deal again? See, I'm gonna pick
So
on Christine. Or
oh,
who? Oh, go ahead.
no, I was gonna say my first deal, I took equity out of my primary residence to purchase an investment property, and I also have a construction. So fixing it, rehabbing it like it was my personal property. So that's something I never do again because I went over budget. So that was definitely a learning experience.
Yeah, that.
Can I
Oh,
ask
go
a
ahead, Dr.
question?
Joe.
Yeah, would you never take money, equity out of your home again? Would you never try to go in and do it all by yourself as far as the rehab and whatnot? What are you saying you'd never do again?
Making it like my house, like adding high end finishes instead of just like, rental grade a little more quality than, the cheap finishes, but not to do expensive finishes. Like
Gotcha.
the nice backsplashes and the type of tile I selected or the flooring selection or the light fixture, stuff like that. I had to scale back drastically, but I've learned since then quite a bit.
Well, that helps me to know I'm doing the right thing by not letting my wife do my decorating on my properties.
Yeah, that'll probably save you a few dollars.
Yeah.
Oh man, most definitely. That one bites a lot of people, especially if you watch HGTV and you look at they going in the high-end stores and you're looking at like, okay, $10 a square foot for, marble, and then you start getting the quartz countertops and these high-end finishes in LA and everything. It's like, yeah, no, I'm looking to try to find something for 25, $30 a square foot, granted, if I'm even putting granted in it, because some of the homes that we deal with that the first time home buyers are doing like 21, 22, you couldn't get a lot of granted. They had ran the price up. I'm like, you know what, we're going to Home Depot putting countertop. We're not installing this project for 3 weeks to get granted countertops installed. And I will tell you a good hack for people to look at it is if you got a house in the neighborhood, go find a couple of houses that's on the market on the same street within a half-mile radius, and just go do when if they have open houses, you can go to the open houses. Or if just get your neighborhood friendly realtor that's on your team to, if it's on listed, then to go show you the house, and then you can go see the finishes that your competition has, and you can see their list price, and you can see some that recently sold, and just look at the pictures and see what type of finishes they had in the bathrooms and the kitchen, and the flooring. And then now you can kind of mimic that, and it lets you know what's the baseline for that neighborhood in that area on what you need to do. So I've definitely found that to be kind of helpful, especially buying out of state and kind of leading the team virtually on kind of giving them guidance on, what's the right materials and finishes if you hadn't personally walked the property. Great stuff. No, I love it. And I think the big one is just understanding like all this stuff you can figure out but you got to get the deal. You got to run the numbers and know that the numbers work. And once you get past that, then you start building it all back together as you execute. But like kind of like Dr. Joe says, like getting the information and putting it all together, being able to run by somebody like, okay, what do I put together? Does my offer price look right? Do I put the letter of intent? How do I send over the proof of funds, and putting all those things together that leads you to the other end of the property. And so there's a lot of steps that end up to go through. But guess what? You can drive across the country in the middle of the night with lights on your car and just seeing 40, 50 feet in front of you. You can go across you can drive hundreds of miles at night by just 50 feet at a time looking in front of you. And so that's the thing that I like to instill in clients. Like, you don't have to have it all figured out. Like, it doesn't have to be broad daylight and you can see 10 miles in front of you. That no, you can go through and step through it. But there's some foundational things you got to do to make sure you're on the right road, because you don't want to detour and you're going down the wrong path, but you want to make sure you're on the right road and then continue to make gains and continue to make progress going forward. So don't be afraid, but you want to have the right information, because the last thing that you want to do is make the wrong mistake that's going to set you back and you set your journey back long term. And so that's the thing that it's time out. So much information out here, and so availability of information and wisdom to learn from other people's mistakes, within the community to share. Because I made plenty of mistakes, and to get here, so you shouldn't be making the same mistakes that every other person has made in your group, because that's where foolishness comes in if you can't learn from other people's mistakes. So that is awesome. Any challenges anybody's working with? Oh, go ahead, Faye.
I was just gonna say it reminds me of the success formula: education, conviction, and execution.
Yep.
That's like you could learn on YouTube University for years and attend all these different webinars and everything, and anything that's gonna help us learn. But at the end of the day, if we're not applying it, it's not gonna work. So you gotta head dive in first. I mean, dive in head first. There's no other way, and then you learn from it. I mean, yeah. And also, when I had my first deal too, I just wanted to share. Like, it's super scary emotionally. Like, there's the fear in there. Like, I couldn't afford to lose this time because I've already lost everything. But then, there's also a lot of elements of faith in that.
Mm.
I know I'm gonna be able to, like, do it. So there's the intellectual part, but there's also the conviction part that I know there's gonna be. Um, he has planned something. That's why I saw it, and it kind of feels right, although it's scary because I don't know what's gonna be behind that door. But anyway, I said, I'm gonna leave it up to you. I'll step in and just do it. You know, if I make a mistake, at least I'm gonna learn from it. Uh, we're doing it in college. We're enrolling. We don't even know. It's not even guaranteed if we're gonna be very
Mm,
successful after that, right? But we're still paying for it. So why not apply it in real life? You're gonna, you know, there's nothing to lose. You're getting um a lot of knowledge. This becomes firsthand, you know. It's not gonna be on YouTube. It's not gonna be on courses. It's gonna be your own program that's gonna really teach you on how to do things your own way. So yeah.
yep. No, I agree. That takes me back to like my first deal that I didn't have it all figured out. You know, I went through the process, but the fear that I had with, and I was bidding on an auction property and I couldn't go on the inside before, you know, making the bid. And so, you know, looking through the windows, you know, going and seeing if the pool was filled up with water and just these nuances to get as much information that I could to make a decision. But at the end of the day, it was like, okay, the fear that I have on, I've never done this before, and the fear of me not being able to be successful at this, is this greater than why I'm starting to invest, me building my financial future for my kids? And at that point, I had a 2-year-old. It was like, okay, the gain for me being successful at this and starting this process, it outweighs the fear and the fear of failure. And so I think for all of us, once we get to the point where the gain outweighs the potential loss or the fear of loss, once that we have that tails that scale tips in that favor of why you're doing what you're doing and your conviction that you have on why you're doing it, that's when you're gonna get off the porch, and that's when you're gonna take action, and that's when you're gonna get serious about it. And I think that was the big thing for me, is like, okay, understand I wanted to build this legacy for my family, and this house, this deal this was part of the journey, the process, and I couldn't stop and I couldn't turn around, and I had to tackle it head on. And once I made that commitment, that it was like, come hell or high water, it's like, I'm gonna be successful at this and I'm gonna make it happen, and go through the challenges with contractors and inspection reports and going through all that. Like, I learned a lot going through that process. But if I thank God that I didn't stop and I never got started, because who knows, you know, how the road would have went. Yeah, I'll open up as we kind of go through and wrap up today's meeting. Are there any challenges, anything that anybody's working through with a deal, or got any questions or something? You know, don't leave here if you got a question about something with real estate or outside of real estate that you need help with, that could get you to the next level and kind of get you past a certain level where you're at right now. By all means, want to open it up uh, for any way to add value.
I want to add the importance of letting people know what you are, I mean, what you do and what you're looking for. I'm closing this week on my fourth sub two property, and 3 out of the 4, somebody brought me a house and said, "You want this house? You want this house?" I didn't go ask them for it. I mean, the one today, one of my patients, I'm a physician, one of my patients said, "I hear you buy houses." And I said, "Yeah." I said, "What you got?" She said, "I want to sell my house, but I don't want to go through an agent." I said, "Tell me about it." She said, "Well, it's got about 60,000 equity in it, and I'll take a little bit of equity in that, but I don't want that much." And I said, "What kind of interest rate you got?" She said, "I got a 2.2% interest rate." I said, "Sold." So we agreed that I would give her I think $23,000 for her $60,000 equity, but she agreed to take some now and some later, which was great for me. So I gave her $6,200 down, and she had a tenant in there for another 7 months or so. So I let your tenant stay in there. You continue to pay the mortgage and collect the difference from your tenant, which she was even. I mean, she was paying what the tenant was giving her as far as mortgage. So when the tenant lease was up, I told her I was going to sell the property, and she couldn't afford the house, so she moved out. And I put some work into it, put a roof on it, and put maybe about 15,000 into it. And this Friday, I'll be closing with a retired NBA basketball player whose credit is not strong as it needs to be, but he's bringing me $10,000 down, and he's going to pay me twice on a monthly basis for a 29-year mortgage that she was getting as a rental, and I'm going to pay the rest of the equity to my tenant, to my seller, over 48 months. I'll be giving her like $350 a month for 48 months to give her the balance of her equity, and I'll cash flow twice as much. I mean, the same amount that she was getting in rent, I'll cash flow that amount for the next 29 years. So I'm super stoked
That's
about
awesome.
that.
Wow.
All because I put out there, my first deal, I put it on social media and I let everybody know that this is what I'm doing. Yeah, I'm a doctor. I'm well known in the Montgomery area, but this is what my new life is going to be. This is my new interest, and it's worked out. The house I closed on last month, a patient brought to me to take this off my hands. It's a sore. I'm losing $500 a month on it, and now I'm cash flowing $800 a month on it. I have to turn it around. So let people know what you do. That's my point.
Yeah. Someone asked me that question yesterday. Like, how did Dr. Joe get those leads just dropping on on his table? I'm like,
Having
well,
conversations, having conversations. I talked a lot about. I think that everybody really wants to get into real estate. I mean, everybody. They just don't
yeah,
have the tool. They don't have the vehicle. Someone want to do it passive. Someone want to do it active. I've had people come up and say, I want to partner with you. I have $75,000. I want to invest with you, and I know somebody got a house. Let's see if we can do something about this. I still got one now that wants to sell me a house, and she says, "I'll give it to you real cheap. I just want to get rid of it." So when people know what you're doing, they want to get on board.
100%. No, I love it, Dr. Joe. You're a living, breathing witness. Like we just gotta get out of our own way and our limiting beliefs. And once we do that, like the world is our ocean. The great part of it is like every deal that you've done, it was somebody on the other side of that you helped out that situation. And then guess what? On the other side is somebody that you're helping with bad credit that needs to get up their family in the house. You're helping them get in the house with creative finance where a normal bank would tell them no, they couldn't have
Right.
their house. And so like you're creating win-win situations on both sides, but we have to get out our own way to be able to get out here and serve people through real estate and be able to put these transactions together because the normal person doesn't understand how to go through about doing that the right way and putting the deals together. So salute to you. That's the epitome of changing lives through real estate right there.
This will be the first client that has a credit score of 650.
Yep. Well, awesome. Yeah, no, as we kind of wrap up, today's been great, motivating. Um, Hopefully it's been a value add to everybody coming out this morning. Invite somebody else that's looking to build wealth and looking to get serious about real estate investing. And that's what we're here for. And I want to keep this going each Wednesday. We're gonna bring different topics, have different people come to share as well, and continue to grow together, continue to build community. And if it's something you're serious about and looking for a mentorship, a little bit more guidance and accountability, definitely reach out and set up an alignment call with myself or Faye. Would love to have that conversation, see how I can serve you, how I can help you grow your portfolio, diversify from the stock market, and build wealth. So with that, one last go around. Anybody have anything to add or anything they want to talk about, discuss? And if not, we'll get
yeah.
this Wednesday going.
I dropped the link for you guys in the chat box to, schedule your alignment call with us. And also we're migrating to another platform. I know we have school. It's almost the same features as school, but a different platform for added security or for everyone. So I want you guys to schedule your alignment call with us, making sure that we are, we're the right fit for you guys. So yeah, I saw Adam already scheduled, Christine as well. And we'd love to know more about what you do and things like that and how we can collaborate as well. So that's why we want the alignment call scheduled with you with us. me or Johnny. Oh, Johnny, you haven't shared with us the update on the 96 units.
Yeah, so great. I'm glad you brought that up. And I was going to say one thing. One of the things that we're doing too at REI Genius that I'm in the process working with a financial firm, a financial advisory firm, and so we're going to be bringing in financial planning as well as some more education around like other equities and other syndication opportunities like outside of oil and inside of like oil and gas, outside of just traditional larger multifamily syndications and things like that. So we're going to be continuing to grow in the space as I wrap up my retirement from the service. That we're going to be continuing to expand our product base, and that's all centered on helping individuals build wealth. So with that, but yeah, so we finished up the refinance for the 84 units in Montgomery and last week. So got that done, got that deal across the finish line, and super excited about that because on the 40, so of the 84 units, we had 40 units that we had a bridge loan on that was 12%, and we had seller financing for the 24 and 20 unit at 8%. And so we combined those three properties together. We've been operating them as one all this time since we acquired them. And then from there, so we lowered our interest rate to 7%. So 7%, 1 year interest only, 4 years principal and interest with a local credit union there in Alabama. So super excited about that, got that done. And so now we're wrapping up the 12 unit there, which is, you know, the last piece of the portfolio there in Montgomery. We got one more building to finish wrapping up. Unfortunately, we had some vandalism along the way with individuals stole the piping out of the buildings as well as some of the electrical wiring and everything. So got a setback there, but we're wrapping up the last building with that going into the next 90 days. And we're going to refinance the 12 unit into a separate long-term debt and moving right along. I think right now, the 84 units, I think we got 2 units vacant right now. And one of those is just where my guys that come up from Panama City that they live in, that they stay in one of the units. So, and it's good. I think where we are right now, no new construction going on, and continue to see right now. I think we just got a 1 bedroom lease for 850, and so we were going in with the market, going thinking 825, kind of when we did our underwriting. So we were just got our first 850 for a 1 bedroom, and I don't see rents going down anytime soon. So it's definitely a blessing. And with that deal, we ended up raising to date, I think raised a little bit under 800K total that we had to do to close. And so one of the things with it, so the appraisal came in on the 84 units at 6.2 million, but the bank originally the bank said they would give us 4.25. But since it was just me by myself signing on the loan, they wanted me to bring in another accredited investor. And I was like, well, no, I'm not going to bring in an accredited investor. So because I'm the only manager for the deal, I didn't want to bring somebody else in on the deal. They have to sign for the debt. And so they reduced my loan to 4 million, even though it appraised for 6.2, and which made me have to raise even more money to bring to the table. But one of the things with it, we were able to get into this deal with 100% financing on 44 units. So the 24 and the 20 unit were 100% financed. And so our cost basis was 4.32 million. And so we were able to take that asset from 4.32 million to 6.2 million in a little bit over 2 years. And so to the point where we could do a 64% loan to value and pull that money out. And so I ended up having to bring some money to close and with that, but we were able to get in with no money down and raise rents to the point where we had enough equity in there where we could take out a substantial amount. So it was all good, and we're still looking to raise. So if anybody's interested, want to come in on the deal, we're still looking to raise about 250,000 more as we kind of wrap up the renovations on that last 4 unit. And we're going to be putting some aside for CapEx for like air conditioning units, things like that. We're going to replace over the next 3 years. So yeah, no, great. I'm glad you brought that up. That was a big one that I've been working for a while.
It's a good opportunity for many as well too that wanted to scale up faster as well in that area, but doesn't really have a lot of cash for it. But plus you're actually backed up by so if anyone interested, I would like to you know to talk to you guys and see how we can collaborate as well about that.
Yeah, great point. It's all you need is one deal. One deal. Like if you're not making offers, you'll never be able to buy a 24 unit for 100% financing. When they give you the rent deposits and actually you get money at closing because they give you the rent deposit they got to hand over. Like you can't imagine it, but if you're not out here learning and seeing how deals come together and being able to position a deal to an investor that's, in their 80s and tired of being, hands on with it and just want to be passive, like that you will never get presented that opportunity. So you just got to get out here, have conversations, and this is, the next 10 years is going to be one of the largest transitions of wealth. As baby boomers retire, passing away, and the next generation of millennials, and the generation X, that they're going to be taking on these assets, and so there's going to be a lot of transition of wealth because most of the real estate is owned, and a lot of it's owned free and clear. And when they transition this wealth to families, these assets that a lot of times they're gonna have to sell a nice portion of the assets to settle the state taxes, to pay the attorneys and things like that, and liquidate. So just being able to step in and pick up one or two. We're just talking about one building. If you can just get one apartment complex, can change your life. That you just focus on paying that down over the next 10, 15 years, and the income that's going to come off that one apartment complex can take care of you and your family, or you through your retirement. So many different strategies, and but we love to have those conversations and kind of see what you're thinking about doing.
Yep, yep. All right, we're gonna be seeing you guys on next week. Anyone else who wanted to share anything? No. All right. Well, I'm looking forward to seeing you guys on your one-on-one alignment call with me or Johnny. So I dropped the link for you guys in there. That's also gonna be our way of identifying those who will be taken on to the new platform. So, no pressure, anything like that. We just wanted to see how we can like help you out in terms of how we can move forward and things like that. So yeah, very excited for everyone. All
All
right.
right. Have a great rest of the week, everybody.
Thank you
You
guys.
too.
See you again
Have a
next
good
week.
one.
You too.
Bye bye.